Hello there, I'm Adam Forbes. I'm the host of the Corporate Escapology podcast and the author of Corporate Escapology, the book. Today, my guest is James Green, and he is not a corporate escapologist. But the reason I wanted to talk to him was I was attracted to the strapline for his business, which was launch a startup before leaving your job. And he was introduced to me by a mutual contact, Eleanor, who I work with, who said she thought we would find each other interesting. We really did. And so we had this podcast really to talk about the role of becoming a startup founder without taking the risk. So carry on your job, but partner with a venture builder like his firm to bring all the capability and all the experience of business building. They're venture capitalists in the organization, they've got business builders in the organization to carry on building your business when you're hard at work and then you're coming back to keep things moving too. So there's a big commitment from you. There's actually a financial commitment to it as well, but it might be a great way to consider building a startup without jacking it all in, taking a huge risk and gamble on a business idea. So let's hear more from James now. Great to see you today, James. Thanks for joining me on the Corporate Escapology podcast. Really keen to hear more about how you help corporate escapologists make that leap out of their jobs.
Sounds good. Thanks, Adam. Thanks for having me.
Cool. Right. So let's just get straight into it. Tell us a bit about DQ Ventures, like what you do, but also maybe even before that, like what was the problem that you observed that made you think, actually, I can set up a business here that can help somebody who's struggling?
Sure. Well, there's a couple of different threads to the origin story, but essentially, I was in Singapore. I had just closed down a startup, which I founded and raised $2 million for,
Mm.
and had gone through quite a lot of pain in that process. A pain which I thought that other people should avoid at all costs. And while I was trying to work out what to do in my life, I did quite a bit of kind of helping here and there, helped a few people raise some capital. And a lot of people were coming to me for advice about startups because I'd been an investor, I'd been an angel investor, I'd invested on behalf of a fund, kind of quasi VC, and I'd been a founder. I was in my network in Singapore, I was kind of the go-to startup guy. And I was also in my early 40s. And seemingly around that time, a lot of my peers and friends and people I knew were going through something of a midlife crisis, maybe you could call it, where,
Oppor-
yeah, but they had basically they basically come to understand that they've got 20 years of work left, and they either felt that it was a whole massive another 20 years and they just couldn't face another 20 years of corporate BS. Or some of them were saying, it's only 20 years left and all I'm doing is I'm being a lawyer, I'm being an accountant, I'm doing whatever. My life was meant for more than this. I feel like I should create something or bring some value to the world and make a difference. So two very contrasting feelings. But
Uh,
but with those two realizations, a lot of people were saying, I'm going to go and start my own company. And they would come to
yeah.
me saying, you've done this, you've raised money. What should I know? What should I not do? And I would almost always say, don't do it. I would say, I would definitely say, don't quit your job. That was the most important advice. And actually, that's why DQ Ventures is called DQ, because don't quit was
Ah,
just the advice that we were giving to everybody.
let's get
Because
I was
I
going to
think a
ask
lot
you.
of people, especially when they're in a corporate job and mid-career, they've got so much going on in their lives that they just think, I can't possibly
Mm.
start something and do my job and be a parent and pay the mortgage and whatever else is going on. So often the default is, I've got plenty of money, I've got some savings, but I've done all right. I can afford to stop and really focus on my business, and that's the best chance of success. When in fact, I feel that that's actually the opposite. It's the worst thing to do, because you absolutely can't afford to get it wrong, and it's very
Yeah.
quick to burn through savings, not knowing exactly what to do and maybe doing the wrong
Well,
things.
that's right. And I think that's the key point, isn't it? from my own personal experience of leaving corporate life to start my own business, um, my own startup as well, I hadn't got really any idea what it was going to be like. I think from the position of a job and the sort of relative safety, and also all that sort of push out of the corporate that you're looking for, you can imagine building a startup to be a ton easier than it is. Particularly if you're reasonably capable, maybe you've even tried a bit of it inside with some corporate business building or something like I'd done. I'd seen things, but actually to be outside on your own, maybe, and just building something from scratch is incredibly difficult and a huge, huge shift from what you were doing before with all that support and structure around you. Whether you liked it or not, it was there. Monday morning on your own, I'm building my startup now is quite a daunting, overwhelming experience. And I guess that's what you'd identified too, that these people, they need more than just an idea and a bit of energy and enthusiasm to get going.
Yeah, that's absolutely right. I mean, we tell people that it's going to be 3 times harder than you think it is. It's going to take 3 times longer than you think it is. You're going to earn 3 times less than you think you are. Um, the highs are going to be much higher than your highs at the moment, but the lows are going to be way lower. And there's a ton of
Yeah.
stuff to learn that you don't realize you don't know. It's a brutal path to take. It really is, and there's definitely times I would think in every entrepreneur's journey where they wish they hadn't done it. But if you push through and you get out the other side of that, then you can experience a working life that is way better than any job could ever be. And potentially life-changing wealth, which is definitely not guaranteed, but it's also not guaranteed in a job, so it's
It
impossible to
really
achieve.
isn't. Yeah, absolutely. But I think that those times three factors you just talked about there, I think that reality check there, I think we need to get that when we're inside the company rather than on day one when we've given it all up,
Yeah,
because there is this rose tinted view about what it's going to be like, and because it's not like that, there is a big risk that people just bounce back to the corporate life when it doesn't work and they don't push through because they weren't prepared for some of the hardships and the time it's going to take and the toll it's going to take on your energy, on your relationships potentially
yeah,
as well, because you just become so focused and single-minded about this. And so, yeah, I feel like try and take as many of those risks if you can on the company's dollar rather than your own.
yeah,
That's a really powerful message that I'm always telling people to. And I think, in a lot of ways, startup is the opposite of corporate. And so in a way, it's not surprising that it seems so attractive, so appealing compared to what you're doing. But because it's so different, there's far more to learn and far more to change, far more that you're gonna have to um, learn on your feet at your own cost, your own personal cost now as well, which
yeah.
makes for a lot of challenges.
From the investing that we've been doing, all the money that we're making was coming from exactly the same people who were telling us that they were going to go and quit their job and start a company. It wasn't the 20 somethings who had the idea for the next Facebook. They were all just getting wiped out and realizing that they didn't know how to run a business. But the people that we'd invested in who were from a sector, knew it inside out, knew what the problem was, and just went and solved it, were doing well and making money and making us money. So there we were
Mm.
thinking, we've got these people who have so much potential, but they don't know how hard it's going to be, and they're very likely to fail. But on the other side, if they don't fail, and not only are they making themselves money, but they're making their investors money. So there's an opportunity here. So basically,
Yeah.
we thought, a bit like you were just saying, at the moment there are 2 ways to start a company. You either quit and go all in on day one, and then work out how to do it and hope it doesn't take so long that you burn through all your reserves in the meantime. Or you stay in your job and you build something on the side. Now,
Mm.
building something on the side, like you said, makes all the sense in the world. But
Mm.
the reality is that, and if anyone listening has tried to do this, they'll know that it's really difficult to make any progress. Not just because you don't have much time, which you don't if you're mid-career and you've got all the trappings of lives that we have, but you also don't really have the headspace because you've got a big job probably, or you've got something going on that's constantly occupying you, and it's really frustrating to try and get something going on the side. So we said, well, why don't we give people a third option, which is where we will raise money into effectively a fund, and we will use that money to pay a team of exited entrepreneurs who have all made money, but not enough money to retire forever. Or if they have made enough money to retire forever, they don't want to retire forever because it's actually quite boring. My co-founder, Ollie, he sold his business for 85 million, and after 3 months he was going crazy. And he's just saying, I just need something to do. So he came and started the company with us. So we hired these people, and those people now found companies with our entrepreneurs that we work with. And so we give them that headspace. So we build their idea, we help them build their company, but we do a lot of the work. And we also help them avoid those potholes that catch a lot of first-time founders out, the stuff where you don't know it. So instead of investing cash, like most funds, we invest time, and we do that because that's actually what these people need most. If you give people 100k, 200k, which is the kind of quantum we're thinking, then they're probably going to spend it on all the wrong things. They'll go and spend 100k with a dev agency to build an app that no one will download. And so that expertise is actually what they need. And in exchange for that investment, we earn a percentage in their companies.
Okay, so you take some equity in those companies over time. Okay, and the other part is that, so I totally agree. It's like knowing what to do and what not to do, but also that time bit is so important. And so what you're also giving those founders a bit of accountability, isn't it? So you're kind of, that you're pushing them on so they can't just let this stuff slip, because the side hustle so often slips. You get busy at work, something goes up in your family, and and this is the lowest priority, and so it just slips and quarters pass and you've not done anything, and it's all about pace in a startup. So by having somebody that is working on things in the meantime while you're at work maybe, but then connecting back with you in the evenings or weekends or when you've got free time, but holding you to account to do the things, I guess the chance of just getting that progress made, so you really activate that side hustle.
Yeah, that's a good point. We're definitely both a coach and a co-founder. So we're coaching founders on what they need to know and what they need to learn, and we're doing a fair bit of training. But like you say, we are holding them accountable because we're not going to keep investing if they're not. So there is an expectation that they have to put in 8 to 12 hours every week. And
okay.
It's flexible. Some weeks people just can't get anything done, and it's fair enough.
Yeah.
We all have lives, but we are like with any co-founder. You can't just let them do all the work.
No.
And likewise, we're not just going to let our founders do all the work.
Yeah. Okay. Great. Well, so tell us about some of the people that you've worked with. Some of these I'm really interested in the ones that have, gone as, I'm sure you talk to lots of people in corporate jobs, but the ones that have gone through with you, what do you notice about those people? What is it that's pushing them out? What are they seeing in you that they don't, that they're attracted to?
I would say that the people we speak to have one of two reactions. They either, because that's something I didn't mention, that we expect our founders to commit $20,000 to their idea, because we're putting in 200k's worth of effort, so they have to put in 20k, and they're the ones that keep working and earning a salary because we're there. So but some people then are surprised by that. So the two reactions we get are, one, hang on a minute, you not only do you want 20% of my $1 billion idea, but you also want me to pay. I mean, you must be crazy. So that's option one, and usually those people are younger. They can afford to sleep on someone's sofa for a year and eat pot noodles, and they should just go and found their own thing and get it wrong. They can afford to. But if they're mid-career, they've got no time. They can't possibly think how they're going to get this thing started, and maybe they've been sitting on this idea for a couple of years already. Then they find us and they say, "I can't believe you guys exist. Why didn't I find you sooner? This is exactly what I need." And so in those cases, it's usually quite a quick conversation that they're happy. We came up with the terms, the 20% and 20K, based on being entrepreneurs ourselves. Had this been available to us earlier in our careers, would we have thought that was fair? And yeah, we would, because it's either that or have a co-founder who either wants to be paid a lot or wants 50% of your company, and you probably don't know them at all. There's no way out of that situation.
Yeah. Yeah, I agree. And I think I said to you, I mean, I found it surprisingly cheap, to be honest, because I looked at a bunch of these things myself when I was building my startup, and I went down exactly the route you said, like find a development partner, and it was going to be like 60 or 100K or something to build the product that I thought was right. So in other words, probably wasn't right. And I don't think my wife wouldn't have let me, but I could have started plunging money into that and been horribly wrong, and then been really disappointed I'd wasted the money, probably found myself reacting and going back and getting a full-time job again. And so I think what you're offering is this really great middle ground, as you say, this third way, as you say. But the 20K, yeah, I mean, it's a ton of money, of course, after tax, but actually it gives you it also means that I'm now definitely accountable for this. It's not just some idea I've given to you to just go and see what you can do. I've got skin in the game in this too. So I'm more likely to stick with it too and commit. I think without that, there is a risk, of course, that, you just muck around for a bit. I'm busy.
The truth is that without that, every single person we've told what we do will say yes. Because who doesn't want an option to own 80% of a business that someone else has built for you?
Yeah,
that's a no-brainer. So there has to be an element of skin in the game. And you are exactly right. You'd be surprised how many people come to us who have spent $100,000 building an app that no one's using, and they say, I'm a bit further along than most of the people you deal with. I'm not at idea stage. I've already got the product. But then you dig into it and you say, well, how many users are using it? None, because you built the wrong thing. And so I'm really sorry, but that money is gone. That investment is wasted. It's painful, but it's true. So our job is to create the proof and the momentum so that it's a no-brainer for them. They're like, this is going somewhere. This is happening. I'm in. But that really, we're not going to run it forever. We're in for a year, and then we're advisors.
Okay.
And then
so you're thinking within a year they will have got themselves out of their company. That's your aim for them. Well, and that's actually quite appealing for someone in a job, isn't it? Too, that sort of year time frame. Okay, I can get my ducks in a row. I get all the people around me kind of prepared for this. I can maybe get some financial buffer in place. I can look out for any kind of restructures going on and see if I can put my hand up.
Yeah, exactly. We've had that.
The ideal scenario. Yeah, I see. Okay. And so tell us, like, what are you offering then? So what kind of support? Because one of the things that you told me a bit about was sort of no code, low code kind of approach to this, and not just like going headlong into getting dev teams to build things. So what kind of offer are you making to a founder that is just thinking about this from within the job?
Yeah. So something you said before is that founders sometimes will go and find a dev partner and build their product. I mean, I hate it when that happens because I don't think it ever works really. I have seen it work where the dev agency takes equity and they're just covering their costs. There's a business in Singapore that I know called Creatella. They've co-founded a business with a friend of mine, and that's going well. But generally, it doesn't work because the incentive for the agency is to spend as much of the founder's money as possible, building as much as possible, milking that opportunity, not really caring if it goes anywhere or not. I mean, they do care. Most people are nice people and they want it to work, but they also want the revenue. So for us, it's not about product at all, really. It's about validation. So our focus is much more on go to market than it is on product. We will do product as well, and one of our portfolio companies builds MVPs for people, and we formed that relationship very early because we knew that was a core part of our offering. But rather than hiring those people and having them on our payroll, we thought, well, let's have it as a portfolio company, and then they can grow independently from us as well.
Yeah.
But they specialize in no code, clickable prototypes that do as little as possible to create validation. I mean, they don't actually do as little as we do sometimes. So, for example, one of our founders is a lady called Rachel in Australia. The MVP for her was basically a very snazzy Google Sheet with a front end. So it looks like software, but it's not. It's just, I mean, there's software out there now. There's one called Glide, which we use a lot, where the interface is software, but it'll integrate with anything. So if you can find someone, a freelancer who can write some ASP scripts, you can use tools. We use a form tool called Fill Out. So we can build MVPs ourselves that look the part, but actually, as soon as you've got hundreds of concurrent users, then they're gonna fall over. But so we'll basically, our bit is find the people who are willing to pay for this product or service, get some money out of them, because that's the only real validation. Having conversations with potential users is an absolute art form, and most people get that wrong because they don't know how to do it. A great tip is read the book The Mom Test. That's probably the easiest way to learn how to do it, but most people just don't do it well and end up building something that actually, when push comes to shove, no one will pay for. So what we actually deliver is thank you.
Yeah.
No, so what we deliver is understand what the founder really wants to build, what they're really good at, how much they care about this thing, and what part do they care about. So do they want to build some kind of AI Internet of Things mirror that will tell you look pretty in the morning, or do they care about someone's mental health? And so there's ways of tearing down the kind of founder's idea to its base form, and then we say, well, how do we build a business out of that thing that is really driving you, that you really care about, that gives you a higher chance of success than the thing you think this is.
And what are you expecting then the founder to do alongside this then? Are you expecting them to be the one that is out there with customers, getting that validation, ideally building that kind of sales pipeline?
Yes and no. So we've got a pretty comprehensive matrix of the stuff that needs to get done and who does what. So we're not expecting our founders to build an MVP. We'll do that. We're not going to get them to build a website or come up with a strategy, do the go-to-market, run ad campaigns, all that stuff we'll do. But when it comes to having the face-to-face with the potential customer, we can't do that because they need to look into their customers' eyes and understand what they want. But we'll tell them how to have that conversation, and we'll give them the questions to ask and train them to do it.
Yeah.
So they do it like a third-time founder would do it.
Mm-hmm. I see. Okay.
Yeah.
Great. Well, tell us about some of the examples then. So you mentioned that lady in Australia there. Tell us about some of the people, and maybe if you can, without giving too much away, like what did they do before that kind of like, I mean, what I really want to do is kind of normalize this so that it doesn't feel such a kind of alien concept. And actually, I think, you're already de-risking this substantially for a founder, but actually normalizing it is also really part of that de-risking for them, that it doesn't seem too alien. So tell us some success stories.
I will, but I would say that if anyone wants to kind of de-risk it for themselves, just talk to me or talk to us. So we've committed to only working with good people and always telling it like it is. So we'll tell people, if people come to us and we don't want to start a business with them, we'll tell them why. Because we want to save them from doing it anyway the wrong way, or at least point them in the right direction of how to de-risk it for themselves. So our kind of North Star metric is to help as many aspiring entrepreneurs as possible to avoid failure. And they can be either within our program and where we own part of the company, or it can be someone else.
Yeah, I see. Okay.
So the type of people, I mean, I can run through them because I can at least run through the public ones. Some people are still working and in their jobs, but yeah. So the first founder is actually a friend of mine. He's a recruiter. He was an MD for Robert Walters, which is a British recruitment firm, and he was out in Indonesia. And I was just telling him about our idea for Deaky Ventures right at the very beginning, and he said, "Right, well, you can help me because I want to go and do it on my own." And he said, "I'm not bloody giving you 20%, but I'll give you 10%." And so I was like, "Mate, you're not really the target market. There's no tech there. It's just incorporating a company and doing a bit of go-to-market." But he wanted the help, so we helped him, and he's now got offices in 6 countries and is absolutely crushing it. He's doing really well. He constantly reminds me that he was far too generous, but that got us started, and then from there, our second founder was a graphic designer, and he has built an online graphic design portal where basically you answer a bunch of questions, and it comes up with a brand, and when you pick the brand, it automatically gets applied to everything you could ever use, like from a compliment slip to an event invitation.
Okay.
So rather than doing the design yourself on Canva, which we've all tried to do, it's all automated. So the third one was, I'm trying to actually remember which order they came in. The third one is one that didn't continue. So there's a lady who I think she was an accountant. She was in Singapore, really impressive, very senior lady. But she had a son with special needs, and she was absolutely driven by creating more support for parents of children going through difficult times, whether they had special needs or not. And we built a really cool early community of parents that cared about this. And that was actually going really well, but she then got offered an amazing job. And crazy money, and she just said, "Look, I really, really want to do this, but I can't just say no to this job." So that stopped. So we basically packaged up all the assets and gave them to her. So she can
once she gets bored eventually.
Yeah.
Yes, and come back to nice.
We've got a company in Singapore, which were 2 guys from IG Index, like a financial trading business.
Okay.
And they came to us they basically just wanted to start a business together, and they'd got a bunch of ideas, and they'd settled on this e-commerce idea, taking the sentiment from customer reviews and using that to determine whether a product was good or not.
Okay.
So we tried to validate that. It was very difficult. It was a consumer product basically, which is much harder than B2B, and we couldn't do it. We could determine that there was a slight differentiator. We could determine whether a product was a bit better or a bit worse, but not enough that anyone was going to pay for anything. So, but at that point, we told them that that's not going to work, but we love you guys. We've got an opportunity here we need some help with the corporate services offering, like accounting, payroll, all that sort of stuff. Because we had a partner in Singapore, but we didn't like them. They were delivering really poor service, and we hadn't been able to find a replacement. So we said, "Does that appeal?" And they said, "Well, we'll give it a try." And now they're doing really, really well. So now they're absolutely obsessed by payroll and corporate services and outsourcing to the Philippines. So I think
they left their jobs.
Yeah.
So they're all in now.
Yeah. So we have 8 companies now that have what we consider graduated. That they've gone from their corporate job and now they're running their business. One of those, which is Rachel in Australia, hers is a community which she's actually running as a side hustle, because it's kind of growing without too much need for her to go full time, but it also for one reason or another it makes more sense for her to keep going for a while. We're building some software that's going to automate a lot of the work, and after that, then she has she has the option anytime to go full time, but it's up to her.
What's she doing?
So she's an unusual one, because even though she's still employed full time, her company knows that she's building this, and that's quite supportive, very supportive. So she's building in public. The business is called Journey, JWRNEE.
Okay.
And that basically matches people who are going on a flight, who are desperately in need of some kind of help. So it could be a single parent with 3 kids, could be an elderly person who's a bit worried about not finding the right way to the right gate. And so she matches people like that with people who want to travel and want to have some of their trip subsidised. So she basically created this marketplace where these people can meet, and that's gone extremely well. So it was one that we hesitated to take on because it was a B2C idea.
Yeah.
But she had actually been all over the press 3 or 4 years ago, because she had been this person with 3 kids traveling, and she had offered a bounty of 1,000 Aussie dollars to anyone who would come on the flight with her and help her, and she found someone.
Really?
Yeah.
Okay.
So but because she'd had all this press exposure, we thought, okay, she's got some advantage here, so we'll do it. And it has actually worked.
Yeah, because you said that to me before. So B2B, you actually prefer B2B business. Maybe you more than prefer. You only really want to work with B2B business. What sort of behind that direction for you?
It's because B2C tends to require a lot of money to get it going. And even when you start making revenue, you're making such tiny bits of revenue that it's probably 2 or 3 years before you can break even. And so if you can't raise money, or you don't want to raise money, then you've got to self-fund that. And not many people can self-fund themselves for 2 years to get something up and running. And also, you might think, well, just go and raise some money then. The thing is with raising money is that people who invest in private companies want and need, in a way, a unicorn exit. It has to be worth $1 billion for it to pay, especially in the consumer sector, where you're going to soak up loads of cash in the meantime, just growing. And so it's really hard to raise money for a consumer business. I would say almost impossible. So we steer clear of that. We actually don't advocate the VC route. We've all had businesses or know of businesses that have had VC funding, and you lose a lot of control. There's many disadvantages and a tiny chance of success. So we tend to steer people towards either self-funding or raising a small friends and family type round and then getting profitable as soon as possible.
Also, tell us. So let's end up with you. Tell us. So how do founders explore this opportunity with you? How do they get to see whether it's right for them? There's a website, I'm guessing, that they can look at.
Yeah, everything goes through our website. So
how does it work?
So at the moment, the way it works is most people either come to us through referral or because they see us online somewhere, like on a podcast, and then they would normally go to our website and have a read and see how it works and see what the model is. Maybe they'll follow me on LinkedIn, and I'm pretty active, and get a flavour for who we are as people. Because the truth is, everyone that we start a business with, we're in business with them for 10 years if things go well. And so we need to like each other, and they need to like us more importantly. And then we've got an application form on the site, and I would say that at the very least, you're going to get an idea of how well suited to entrepreneurship you are, based on our experience as investors in over 100 companies and founders who've built quite a few companies and had quite a lot of exits. We'll give people an honest assessment of what we think of their idea, of them as a potential founder, to try and help them on that journey, whether it's with us or without us. But yeah, that's the easiest way.
And are you looking all the time? It's not like you've got dates for this, so you just take people on?
So we don't do cohorts. You've got businesses out there like Antler, which I'm an investor in, where they'll get loads of people into a room and then do kind of power networking and try and find a co-founder, and then you get some seminars and help and steerage, but you're basically building the business yourself. that's really a full-time commitment. With us, we're looking for individuals, and we'll work to their time frame to launch a business that works for them. Our goal is to do it within 12 months. I mean, some have taken a lot longer, and we're never out. So I still speak to Rob at the first one we did. He's got 6 offices around the world now, but I speak to him all the time, and when I do, and when he comes to sell his business, then we'll be right by his side again, because we've had big exits between us, and we'll be able to help him optimize that. Surprisingly, a lot of people, they spend years building their business, and then an opportunity to sell it comes along, and they just do it, and they think, "Wow, okay, you sold it, but you didn't take much time to optimize that part." That there's probably many millions of dollars that could have changed hands by changing the way you do that.
That's very interesting, and I've not thought of that. Yeah, because I'm sort of so focused on that first year and that transition. But of course, you're with them throughout because you've got equity in those. You hold some of their equity, and yeah, you want to make sure that they do as best as they can for your investment too. But it's a great opportunity where you can bring in your expertise that they otherwise may lack. Yeah, fantastic. So I think, that's the incentive, isn't it? You're there throughout that whole 10-year journey with them. Shorter if you can, both can, but even so, it's a long-term commitment. And I guess the other thing is, you've got that really close working relationship that you build from the start, and that builds these very good foundations, so that you are this trusted advisor over those 10 years. Whenever they have particular problems, they know they've got somebody in you that's on their side, really.
I mean, that is the truth, that we're kind of attached at the hip, and we become good friends with. I don't know how this will continue, because we actually want to start 1,000 companies is our goal. We think this is a massive opportunity, so we want to scale it up. But certainly right now I'm doing the work myself. There's only 6 of us in the business, so we're hands on with every business.
Yeah, great. Excellent. Brilliant, James. I think it's such an option for somebody sitting in a job thinking and I was like that for a long time. Ideas all the time, had a bit of capital to spend on something else, didn't have much time, definitely didn't want to take the risk. I just think what an incredible option for somebody. And 20K is a big chunk of your money, but actually to spend it wisely, that 20K, rather than just sort of guessing your way to success, hopefully, and probably not, is that's a huge help for many people.
I think it's a no-brainer. I think you get people on your team who have been there and done it many different times in many different ways. And yes, you're right. I mean, the worst thing that can happen is that it doesn't work, and then they've lost maybe the whole 20K. We've lost our whole investment. But the truth is, that's every business. Every business can fail.
Yeah, absolutely. Absolutely.
And do you want to get to 65 and then think, what if I just tried to do that? Why didn't I?
I know. Brilliant.
Yeah.
Well, so I'll put the details on the podcast of how to reach you and how to get you on LinkedIn. I hope lots of people think this is something that I should be doing. A great way to manage that exit rather than just flip out and take a whole load of unnecessary risks. So thanks for talking to me.
No worries. I appreciate it. Thanks, Adam.